what does love got to do with it? Actually, what I meant to say was what oil's got to do with it, man. It's just like the old Tina Turner song. Damn, I'm old as hell. Okay, what does oil got to do with the Federal Rate Reserve decision today? Guys, sometimes the markets are complicated. Sometimes they're just too damn simple. And it's one of these days where oil is actually telling us specifically what's about to happen after the Federal Reserve announces the decision at 2 p.m. sharp today. Guys, it's too damn simple. You gotta love the markets when they're so simple. Look, it's gonna be a pop and a drop. And some of you may be looking at this wondering, man, what the hell is this, Leonardo? Couldn't you do like a better job? Couldn't you do some Photoshop on this thing or something? What is this? Man, I know it sounds a bit complicated. I'm going to show you exactly what the hell this is, guys. So check this out. Basically, all I want you to focus is making sure you understand that this is how you short the damn bounce. Basically, buy puts when stuff goes up, and that's exactly what's going to do. The Federal Reserve announces the decision, stock market moves higher, then it drops. Then it bounces, then it drops. What you want to do basically when the shit bounces, you want to buy puts. Let's roll. Here's a little bit of visualization for you guys. For those of you who may have a hard time interpreting this, I think I'm going to give you an example that it's going to be very difficult to forget, so you would clearly understand what it actually is to short the damn bounce. Fine, Leonardo, man. I get the point. I got it. I got a short to bounce. But like, tell me, what do you actually see? What's going on? I mean, the whole world is telling us that the oil price is going to move higher. So here's the deal, guys. This is what was actually revealed to our 13 Market Moves daily subscribers like a few days ago when oil was making that jump with the drone attack and all that crazy stuff going on. But the point is $61 is what we've determined was a very crucial level for oil. Initially, we recommended buying the dip right here. Further chart actually demonstrate that oil did move higher, so this was a good move. But what we did point out 3 days ago in for our members is the fact that if oil was reluctant to break through this 61, 62 area, that oil was going to drop. Now, you may be wondering, what the hell does this have to do anything with federal rate decisions and all that stuff? Well, the bottom line is you have to sometimes observe the institutional behavior in order to understand what they will actually do next. So by analyzing this oil chart, which I don't have a picture of the weekly or daily oil chart here. This is just an intraday chart for the last 5 days. But if you were to look that chart up, guys, it's bearish as hell. So oil has been bearish as hell, and now it popped on this drone attack, and now it's reversing. And we basically said that there was a high probability of it doing it. And now, if you look at today's chart, what do you see? Now, be brutally honest with yourself, because if you can't see a damn thing on this chart, guys, that's a problem. But I got the solution. You can take one of the courses we got, Charts Divergence, Pattern Recognition, and you will actually know exactly what's up on this chart. And exactly what's going on this chart, guys, is a head and shoulder. But let's not get things complicated here for a second. I just want you to focus. So this is the pop. Then this is where things move higher. This is where you want to short it, and this is the drop. So basically, you want to short the bounce. You want to short the bounce here. The idea is if oil cannot rally, given this incredible circumstances and catalyst in Saudi Arabia, then oil is not destined to move higher. Oil will actually continue to move lower. And if oil drops below 50, that was actually the catalyst for the markets to crash last September, October, November, December. So if you don't know what the hell happened last September, October, November, December, you can actually look out for our videos on this channel. We actually predicted the crash accurately, literally down to the day when the market started reversing from hitting all-time highs in September last year to moving lower all the way to the December lows, and then we predicted how the market was going to reverse from there and move higher for 6 months, which is exactly what happened as well. How did we know it? Guys, it's the chart patterns and the 13 markets move formula. Bottom line is this. This is the head and shoulders on a 5-day chart. Okay, so here's your one shoulder, here's your head, here's your other shoulder, and basically this chart pattern is telling us that institutional buyers, I mean big guys, billion-dollar investors, they are not buying oil. They're actually selling it. They're selling the hell out of oil. Basically, they're telling you that despite of this 5% decrease in the oil supply worldwide over this drone strike, and even the possibility, which we pointed out in the last few videos to our members, that there could be another spike because there could be another drone strike, could be hitting some other places. But considering all this, overall, institutional investors are positioning themselves for a drop in oil. When oil drops, not like when oil drops like $1 or $2, but when oil drops below critical levels and when it drops fast, in other words, we're talking about the magnitude of the move, guys, here. When the oil drops fast and it drops below 50, the markets will freaking crash. But how do you apply that actually towards the Federal Reserve decision today, guys, is very simple. It's not just the oil that is actually giving us an indication what institutions will do when the Federal Reserve is going to make its announcement today. So initially, the market is going to pop, and then it's going to drop, and it's going to create this sort of head and shoulder pattern. Some of the institutional activity in some other areas is also pointed out to that. Our proprietary 13 markets move formula is actually, last few days, have been just picturing this 11 move and recording this 11 move pretty much everywhere intraday. Guys, for those of you who may not be familiar with 13 market moves, guys, it's a pyramid type of move that represents a top information in the market. And we're seeing it everywhere. And so in the picture I've got here for you, basically, you know, the market pops and drops. And point this out, this level of 3,007, which took place yesterday, and then it pops and drops again. Now, interestingly, if you really zoom in and you look at this formation, what do you see? You see exactly the same thing I just shown you on the damn oil chart. Can this be real, Leonardo? Did you create this in Photoshop? No, guys, you go to your TD Ameritrade, Thinkorswim, you can look this shit up yourself. So basically, this is what's going on right here. You got a head and shoulder within the move 11 type of formation. You got 3 of them in the day, guys. That tells you something. Damn it, it's a top. So market yesterday fails to break about 3,010 level. And I don't have all these pre-drawings here, but the idea is the same. I mean, I hope you can see it. Use your imagination. Draw this imaginary orange pyramid right here, guys. The point is, a couple of days ago, the market fails to break above and close the gap above this 3,010 level. Since then, it's struggling. So look, pre-market, actually last night, it closes at 3,009. Just a point under this 3,010 level. So it makes it very easy to actually understand your entry point. So your entry is very simple. If the market bounces after the Federal Reserve decision to 3,008, 3,010, what do? You buy puts, not calls, which most of you are going to want to buy the damn calls anyways, and you're going to do it anyways, despite of you even watching this video. But later, you are probably going to realize how wrong you were, and you're going to review this video, and you're going to be like, damn it, I should have listened to Leonardo, but I didn't. Shit. Anyways. Moving forward, institutions are getting out of favorite stocks like Shopify, all-time favorite from 130 bucks to 410. Roku, we just suggested shorting the hell out of Roku at 170, 160. The damn thing is at 130 today. Literally, within a few days, guys, these big major moves are happening, but the reason I've got Shop and Roku, not because we actually identify them precisely. Just short the damn pounds in let's roll. Things. Actually, I wish everybody shorted Shopify at 409.30. We sent a message to our group to actually short it about 2 weeks ago at 409.30. Well, since then, you know what happened. But the point is not the fact that we were 100% accurate at identifying the stop, which represents by this orange dot right here, but the fact that it's another head and shoulder. It's another head and shoulder. And what's notable is this particular stock is so damn bearish. It looks like everybody's getting out of it. Look at this volume right here. Not only they're selling it, but they're selling it on volume that we have not seen like since June, April. Guys, this is some serious stuff. So you've got this head and shoulder formation in the top favorite stocks. You got this head and shoulder formation in oil. You've got this head and shoulder formation in the S&P index that tells you where institutions actually positioning themselves to be going into this Federal Reserve announcement, and they're not positioning themselves to buy. They're actually positioning themselves to sell. They are going to sell despite of what the Federal Reserve decision is actually going to be. So to make it a little bit more clear, just in case the Shopify chart didn't do it for you, here's Roku. Okay, here's your shoulder, here's your head, here's your shoulder. Okay, and here you got a freaking middle finger, which we described a few videos ago. I think we even posted one or two here on YouTube outside of our membership area. So basically, you see the volume is happening on the sell-off volume is happening on much stronger volume than the buy side. When it's also combined with a death cross on the MACD and you throw in some solid chart patterns like a head and shoulder, guys, the move is lower. I mean, we've been advocating this trade since it was right here in this area pretty much every day in the last 7 days for our daily members, subscribers. And, you know, guys, when banks are getting out of their favorite stocks. Look, this is a trend reversals. This is where the money is made. So look at this thing. Just for simplicity purposes, just forget about everything for a second. Basically, the thing moves all the way here, literally non-stop, where they keep buying the dip, moves higher, okay, all the way to this area, and now the trend is actually reversing. You don't see that very often. Now, Shopify is the same thing, right? Look at how beautiful this uptrend is, right? They're buying the dip, and then this trend is reversing. And there's some easy proprietary patterns that we describe in our charts and divergences course that actually pointed to this top right here. We said short, buy puts right here. So the idea is, it's not just the fact that they're selling all the favorite stocks. It's not just the fact that S&P is drawing this move 11. It's the fact that oil is drawing the head and shoulder pattern when it shouldn't, on the opportunity of the fact that oil could easily move higher right now. It's actually not moving, and it's creating a bearish pattern. Oil prices, as just anything else in life, it's created by supply and demand. So if the supply for oil increases, you know, prices drop. If the demand for oil increases, prices go higher. You got a situation right now with oil where the demand just got cut. 5% of oil supply got taken out, okay, on daily worldwide supply, and the price of oil just popped, and now it's selling off. So even on incredible market conditions where the supply has been diminished, the fact that they're selling oil is telling us that institutions, the big time investors, are actually betting on the fact that the demand is not going to be strong enough, even considering the shortcomings in the production area, guys. So that tells you that the market is about to go to hell. So look, if that wasn't enough for you, here's the reverse mirror pattern. Now, guys, I've actually described the reverse mirror pattern a few months ago when we were analyzing the stock of Google, and we've said that Google was going to make a significant move higher based off this reverse mirror pattern, and we're noticing the same reverse mirror pattern on the VIX. Basically, VIX pre-market today is at 14.36, and we're saying the next move in VIX even though you may be looking at the chart and VIX actually looks like it could be going lower. The next move in the VIX is higher, not lower. So prepare for the VIX to actually rocket. We have a calculation to where VIX could actually be heading to a 32 level. I know it sounds outrageous because right now it's at 14. Now, please do not misunderstand me. VIX is not going to go to 32 overnight, but we think over the course of the next 30 to 60 days, VIX could actually spike to 32. Now, one interesting picture I do not have here, forgot to insert it, is the picture of the VIX right before some major moves in the market actually had happened before. And this is where the VIX has been positioned, and the chart pattern has been highly resembling this chart pattern right here, guys. Basically, when you had 600, 700, 800 point drops in the Dow, you know, similar proportion in S&P and NASDAQ, percentage-wise, this is where VIX has been. It's been between 14 and 15, right around here, and it broke out like crazy. I mean, just look at the chart. Just make it your homework, guys. If you're really trying to study, understand the markets, make it your homework to go in, look at the VIX chart in January and February of 2018. This is a super great example that illustrates what is actually about to take place. So I'm not here to give you all the answers, guys, but I'm here to just kind of, you know, make sure that you try to look up some stuff that could help you become a better trader, guys. Now, there's tons of material we've recorded for you. As a matter of fact, guys, we got a new course that's coming out that's only going to be like 500 bucks. Okay, I know a lot of you have been asking for it. You're like, hey, Leonardo, you know, what's the deal with the courses? They're so expensive. Well, guys, we've developed a course that answers 233 questions, the most important secrets for building your account, for advancing your account substantially higher, no matter whether you're starting with a small account, a big account. That 233 course, it's about 233 most important trading questions that if you're looking at getting better at a trading, you just absolutely have to get a freaking answer to before you place your next trade. Now, the course is being finalized as we speak, and it's hours and hours of information, actually in a live Q&A format, which is really cool. But so if you're trying to learn, make sure you take advantage of that. For now, to focus on today, just short the hell out of the intraday bounce when the market actually goes to 3,008, 3,010 area. Buy oil stocks puts. And if you don't know which oil stocks puts to buy, hey, you go on the website, tradingoptionslive.com, you can actually find our 300 watch list, and it actually specifically points out the best oil stocks to be buying and trading puts on. So specifically, if you're looking to put on this trade on oil stocks, I'm not going to give you all the answers here. That would be too damn easy. And you guys probably wouldn't appreciate it anyway. So buy oil stocks puts. Damn it, buy some puts. And, you know, just remember, Federal Reserve is going to announce market's going to pop and then it's going to drop. So be ready to short the hell out of this thing around 2:30, 3 p.m. Guys, let's roll. And just in case you have forgotten, what is a market bounce? Bounce, bounce, bounce. Let me show it to you one more time so you would never miss the opportunity to short the market ever again. Let's roll, guys. I'll see you on the next trade.